Hi everyone, and welcome to the very first YouTube video with Acing Accounting. So today we'll be looking at 2021 accounting paper 1. We will check question 2, which is your statement of comprehensive income and your retained income note. Without further ado, let's just get into it. So we are provided with information for the financial year ended 28 February 2021, which means our year begins on the 1st of March 2020. Alright. So 2.1 says refer to additional information B and F. So calculate the value of the closing stock on 28 February 2021 using the weighted average method. Okay, we head to information BF. It says stock valuation. The business sells sunglasses. The accountant has incorrectly calculated the closing stock amount, which is reflected on the trial balance. The weighted average method should have been used. This must be corrected. Okay, so our opening balance, this is the stock of sunglasses. Our opening balance was 2,433,000, and then we had total purchases of 8,572,000. We purchased a total number of units to be 11,500. We opened with 4,000 units, and we are closing with 2,400 units, which means we are then able to calculate our weighted average cost of stock. All right, so remember the formula. It's total cost of stock over the number of units available for sale. All right, I just hope you got that. Okay, and then now we just plug in from the formula. So it was 2,433,123 plus 8,572 over your opening stock, which was 4,000, plus your purchases, which was 11,500. So calculating this, what are we getting? Let's see, 710 per unit. Now we had a closing balance of 2,400 units. Okay, so it's 2,400. This means it's 710 times 2,400. So that's the actual value of the closing stock, and we are getting a value of 1,704,000. Right, and then we move to 2.2. 2.2 says complete the statement of comprehensive income for the year ended 28 February 2021. All right, so now we move to information A. Information A, we're given the extract from the pre-adjustment trial balance on the 28th of Feb 2021, which is the end of the current year, and then we have our pre-adjustment trial balances on the 29th of Feb 2020, which were the opening balances for this year, which is 1 March 2020. All right, now moving on to the very first information BA. It says the markup achieved is 160 on cost, and then the correct gross profit is 14,881,600. All right, so it said on cost. Take note of that. And now moving on, our cost of sales. How do we calculate cost of sales? So we have been given information. We have sales, we have cost of sales, and then we have your gross profit or your markup. All right, so your gross profit, you have been given to be 160%. Now if they said on cost, that gives you a hint to know that your cost is 100%, and then your sales are your cost plus your gross profit, which is 260%. We added these two amounts. Okay, so now there's a formula that you guys need to know. It goes like this: what you want over what you know multiplied by the given amount. Okay, so now what you want here when you're calculating your cost of sales, what you want is 100, what you know is 160. Which amount is given? 14,881,600, right? And then that's how you get your cost of sales. And then we type into our calculator, and I'm getting 9,301,000. And then you can just simply add these two amounts to get your sales. Or you can just simply start by calculating your sales, and then you work your way downwards to calculating your cost of sales. All right, so now we move on to the next adjustment number B. So packing materials used during the final financial year was 39,700. You just record that as it is. Okay, we have packing material. It's 39,000. Wait, okay, I forgot that amount. Sorry about that. It's 39,700. All right, 39,700. Okay, now moving on, it says here okay, so we are done with this B. And then number C, received and recorded 9,750 from the insolvent estate of a debtor which paid out 65 cents, which means your 9,750 is your 65 cents, and then the remaining amount must be written off. So how much must be written off? It's not a train smash. You were given 9,750, okay, which is 0.65, right? What was not paid is 0.35. Okay, so 0.65 is the same as 65%, and then 0.35 is the same as 35%. So what you want over what you know, we want 35 over 65, what we know, multiplied by the given amount, so that we can see that how much of the debt was not paid. So now this simply means that we have written off 5,250. Okay, so that goes with our bad debt, 5,250. Okay, plus we were given an amount. If you could check your pre-adjustment trial balance, we're given an amount for bad debts as 28,800. All right, plus 28,800, and then you calculate your bad debts to be 34,050. All right, and then moving on to the next adjustment. Remember that you need to be as quick as possible when you are working your account on your accounting questions, because the time is really not there when you are writing that test or exam. So now we are adjusting the provision for bad debts to 9,350. So let's check how much it was the previous year. The previous year it was 9,800. So our adjustment for bad debts, it has increased. So if it has increased, oh sorry, my bad, it has decreased. So since it has decreased, which means the business is going to record that as an income. So it decreased from 9,800 to 9,350. So the difference is going to be our income, 9,350, which is 450. All right, and then we come here, we have bad debts adjustment, or you could just simply say provision for bad debt adjustment. and then you show your calculation. No matter how easy your calculation may be, just show it, because you might get the answer incorrect, but let's say maybe one of your figures there are correct, and then you are able to get a mark. But if your answer is not correct, then you get a 0 with if you haven't shown your calculations. All right, so number E, it says one of the employees was on sick leave and was omitted from the salaries journal for February 2021. Her salary details are as follows. So your deductions are 30% of the gross salary, so which means your net salary is 70%. All right, because your gross is equal to net plus your deductions. Remember, your net salary is what you get after they have deducted, after you've paid your taxes and all of that. Now, employers' contributions, there's a star here, which means the next information here is related to employers' contributions. Now, employers' contributions are debited to the salaries and wages account. Okay, so which means we should also add this amount to the salaries and wages account. All right, so calculating our gross salary, what we want, okay, let's do the calculation here. So what we want is 100% over what we know, which is 70, multiplied by the given amount, which is 23,800. All right, so that's 34,000. Okay, that's 34,000, remember, plus 4,500. All right, so we move to salaries and wages. It's 34,000 plus 4,500. We add those amounts. Let's make sure we got the correct amount. Yes. All right. Okay, so we add those. Plus 6, 4, 2, 5, 1, 2, 3. Make sure that when you're adding these amounts, you are adding the correct amount, and make sure that you do not have any silly errors, because accounting doesn't need you to make silly errors so that you can get all the marks you deserve. All right, and then now we move to trading stock deficit. I am saying this because remember we have dealt with trading stock. All right, so trading stock deficit, we are given an amount here of trading stock, which says we had stock worth 2 million. But remember, when we calculated stock here, what did we have? We had 1,704,000. Okay, so which means our stock was overstated. So our trading stock deficit would be 2 million minus 1,704,000. Okay, so we have 296,000 worth of stock that we have lost. And then our next adjustment talks about rent. Yes, rent, because we have dealt with F. So now we move to G. The premises have been rented for the past 5 years. The rent for March 2021 has been received and recorded. And due to the lockdown, the rent was decreased by 25% per month for only 3 months, from April to June 2020. So transactions like this, or adjustments, they need you to draw your timeline. Okay, so you draw your timeline. Your year began in March, April, May, June, July, August, September, October, November, December, Jan, and then you have Feb. But they said we've paid until March 2021. We have received, actually, because it's rent income. All right, reading once again your information, it says the premises have been rented for the past 5 years. The rent for March 2021 has been received, this is important, and recorded. So due to the lockdown, the rent was decreased by 25% per month for only 3 months. From when? April to June 2020. All right, so here we're in 2020, this is 2021 at the end. So in April, May, and June, we had these 3 months at 25% decrease. Okay, so which simply means that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months we paid the normal amount. Now we are going to let X be equal to the monthly rent. All right, we're going to let X be the monthly rent without any increase, without the decrease that we were told about. Okay, so let's check how much total rent income did we receive. We received a total of 208,250. Okay, so 208,250 is equal to all that we have received in these months. Okay, so in these months we have received rent for how many months? A total of 13 months. Okay, 13 months, but the rent that we received for these 13 months is not equal. How do we work this out? Okay, so we said let X be equal to the monthly rent. Okay, so how many months did we pay the normal monthly rent? We paid X here, here, okay, which is 10 months. You can say 10x. All right, 10 times X. Now plus, all right, plus the rent that we have received here. The rent that we have received here is 25% less. Now we want 25%. Okay, we want 25% of X, and we know that 25% is equal to 0.25 of X. And how do you determine a percentage of any number? Let's say maybe you want a percentage of 40% of 100. Okay, you'd simply say 40% times 100. Right, now same applies to our X. Okay, we'll say plus how many months did we receive the rent with the decrease? 3 months, multiplied by X, right, minus X times 0.25. So this is the monthly rent minus the 25% of X. Okay, I hope that makes sense. So it's 208,250 being equal to 10x plus 3x, and then minus, because it's a decrease, we are decreasing the monthly rental by 25%. So let's say 3 times 0.25, you have 0.75x. Okay, it's 208,250, which is 13x, 0.75x is 208,250 being equal to 12.25x. So 12.25, divide both sides by 12.25, and 208,250 by 12.25, and then X is equal to 17,000. So 17,000 is your monthly rent without the decrease. And what have we received in advance? We have received 1 month in advance of rent. Okay, so but here we paid the normal rent, which means we don't need to calculate to 25%, which means we record the 17,000 as it is. So now when our rent income, we subtract 17,000. Okay, it's 250, which is 191,250. All right, and then we move on from our rent to H, and then fixed monthly repayment of 59,000 have been made and recorded. We're talking about the loan now for the financial year 28 February 2021. Okay, so the loan statement reflected a balance of 1,652,000. So the loan, we are supposed to provide for interest on loan capitalized. So in the books of the business, we recorded the loan at 1,439,600 because the business does not take into account the interest. Interest was not taken into account when the business was recording this. But now when the bank gives us our loan statement, they have included interest. So now we need the difference between the two amounts. And the difference between these two amounts is the interest that has been incurred after the payment. Okay, so what we have is 1,439,600, and here we have 1,652,123 minus 1,439,600, and then when we calculate that, we get 439,600, we get 212,400. All right, so that's our interest because we have paid at the bank. All right, we have paid at the bank and we have recorded, but the business does not take into account interest. So the difference between the two amounts is the interest incurred by the business, which is 212,400. Okay, so we have interest expense, which is 212,400. All right, we are done with our loan. We have provided for the interest on loan capitalized. And then it says an old delivery vehicle was sold for 88,400 cash on 31st December 2020. This has been correctly recorded. Details of the delivery vehicle sold. The cost price was 198, and then the accumulated depreciation on the date of sale. So they have calculated the depreciation for you. This is pretty much easy. So what you need to do quickly is draw your asset disposal account. Okay, so I have your asset. It's very important to do this as quickly as possible. So you are selling your vehicle, remember, and then you have your accumulated depreciation this side. Please allow me to abbreviate. And then you have your, because you sold cash, you are going to say bank, but if you sold on credit, you would have said debtors. All right, okay. And then so we sold for 88,400 given the information, and then our accumulated depreciation is 115,500, and then the cost price for the vehicle is 198,100. It's 198. Now from here you can calculate either your profit or your loss. Check which of the two sides is greater. So we can simply see that this side is greater. Your credit side is greater than your debit side. It's 115,500 plus 88,400, which is 203,900. It's 203,900. And then here you have your profit or loss. Okay, sorry about that. It's supposed to be profit on sale of vehicle. Okay, so you will get that. It's 203,900 minus 198. So getting the profit on sale of vehicle to be 5,900. So the profit goes into our income, and this completes our other operating income. So profit on sale of vehicle, it's 5,900. Okay, always ensure that you have made your calculations correctly, because mistakes really happen and you really don't notice because everything is happening very quickly. Okay, so now J says the correct net profit after tax after all adjustments is 1,342,080. And 80. So the income tax rate is 28% of the net profit before tax. So your net profit before tax is always 100%. your net profit after tax is equal to your net profit before tax minus your tax. Okay, so we know that this is 100 minus your tax, which is 28%, and your net profit after tax is 72%. Okay, so working our way to the bottom of the answer book, we're given your net profit after tax. We want our income tax. What do we have? We have or what do we want first? We want 28%. What do we have? 72. What amount is given? 1,342,080. Okay, it's 2872 times 1,342,080. Then we have 521,920. And then you add these two amounts to get your net profit before tax to just simply 342,080. And you get 1,864,000. And then now you can just simply work your way up to reduce your strain. So now you can just simply, because this is interest expense, we have brackets there, and then you add it back because we are working in reverse. We have 2,076,400. Okay, and then now we can't continue working because we need to complete our operating expenses. Okay, let's see what depreciation has for us. So it says provide for depreciation as follows: only 25% per annum on cost for vehicles. Okay, so for vehicles, let's check what we have because we're supposed to use the cost. Okay, so the cost we're not given at the end of the year, but we were given a cost at the start of the year. And remember that we have sold a vehicle worth 198,000. So now how do we get the balance at the end? So the balance at the end is equal to the opening balance minus what we have sold. So it's 1546 minus 198. So our closing balance is 1,348,000. Okay, let's see. So now when we calculate our depreciation, it is going to be 1,348,123 times how many percent? 25. Okay, it's 25%. So depreciation goes to, okay, so for equipment, they have told us that it's 90,500. Okay, so we'll add that too. So we have got 337 and 23 plus, what's that amount again? 90,500. Okay, 50 plus 337 is 90,500, which is 468,750. So let's ensure that we got all the amounts correct for depreciation. We were given the cost price. So we also were given your opening balance, but you are not given your closing balance. So to get your closing balance, you take what you had, you subtract what you have sold, and see what you have left. So it's 1,546,000 minus 198, and then I'm just recalculating to ensure that we got the correct amount. Okay, it's one. Okay, this is equal to 1,348,123, and then I multiplied by 25% to get that what we got there, which is 337,123. Okay, so we are done with depreciation. We have added the 90,500. We are done with your correct net profit after tax, and then we are supposed to complete our statement of comprehensive income now. Because we've filled in everything, I think we are able to continue with all the calculations now. Okay, so we'll start by adding this to get your other operating income. So it's 5,800 plus 191, 250 plus 450 plus 5,900, and I'm getting 203,400. Okay, let's recalculate that just to make sure. Okay, yes, that's the correct amount. Then your gross operating income, you add these two amounts. 881,600. I'm getting 15,085,000. Alright, and then now we are going to calculate our operating expenses. We add all these amounts. Oh, please ensure that you get all of these amounts into your calculator correctly, and just calculate twice just to ensure that you got everything into your calculator correctly. Okay, so 6,463,500 plus 468,750 plus 39,700 plus 34,050, and I'm getting 13,000, and this is 6,500. Okay, let's calculate just one last time for a few seconds. It's 497,200, 342. Remember that every second you waste in that exam is really important. So it's 6,463,500 plus 468,750 plus 39,700 plus 34,050. Okay, so I'm still getting the same answer. Now we can continue to calculate our operating profit. So it's 15,085 minus 13,000 and 65,600. Okay, so I'm getting my operating profit to be 1,371,900. Okay, let me get my numbers correct. It's 1,371,900. Well, no, this is incorrect. Sorry about that. This is incorrect. What did I do here? Let's see. Oh, I forgot the zero here. Okay. Alright, so I'm getting a different answer now. It's 2,019,019,400. I forgot the zero here, so that is why I made this mistake. Okay, see, that is why I acknowledge you guys to be really careful when you're working on this. So now our interest income, we're not given any information, which means this is a balancing figure. So now what we can do is just take these two amounts, so take this one and subtract this one. So it's 2,076,400, because interest income is an income. It's supposed to be added. So when we add, now when we work our way backwards, we're supposed to subtract this one. All right, so it's 2,076,400 minus 2,019,400, and I'm getting our interest income to be 57,000. Okay, let's just ensure 2,076,400 minus 2,019,400, and I'm getting 57,000. So this comes to an end of the statement of comprehensive income, and then what we move on next to is our retained income note. So get ready to do the retained income note. All right. Okay, so we are given information here, information K. All right. So note the relevant entries have all been made. Okay. 250 shares were repurchased at 4 Rand 25 per share on 30 November 2020. Okay. And then bullet number 2 says on February 2021, the ordinary share capital comprised of 3,412,500 shares. A final dividend of 36 cents per share was declared on on 28 February 2021. All shareholders on the register at the financial year and qualify for for final dividends. All right. So what you would need to do, I just need the space, so I'll clear our asset disposal account there. What I need to do quickly, and what you would need to do when you are working with such, because it can be confusing at sometimes. Remember, on your retained income note, you need your premium. Okay, I don't know what you guys call it, but I used to call it a premium. The premium is the amount that you receive or you pay that is above your average share price when you repurchase your shares. Okay, let's say your average share price is 5 rands and you repurchase shares at 5 rand 25. This simply means you have paid 25 cents extra, and I would say this 25 cents is your premium. Okay, so now we are supposed to find what the premium is. Now, how can we find that? By quickly throwing your ordinary share note. All right, so this is your balance, and then this is your repurchased. Okay, this is at start, repurchased shares. Okay, then here you have your balance at the end, because none of the shares we were not told anything about shares being issued. Balance at the end. All right, so at first we were told that 250 shares were repurchased at 4 rand 25. Okay, so we know that 250 were repurchased, and at the end we were told that we had 3,412,500. That's the end. Now, how do we get what we had at the start? You just simply add these two. Okay, so it's 250, it's 3,412,500. So that's 3,662,500. Now you know how many shares you had at the start of the year. And then you quickly go to your information. If you could see here, we are given two amounts on your ordinary share capital. Okay, so on your ordinary share capital, you are given 13,650,000 and 14,650,000. So this is your opening balance, this is your closing balance. Okay, you quickly fill that in. Your opening is 14,650 and your closing is 13,650. All right, now you can simply calculate your average share price, but without if you found this question simple for you, you could have just simply added these two amounts, and then you take this amount and you divide by the addition. So which is what we have done, just that we have taken a long route just for you guys to be able to see how we get to the answers and how you are supposed to approach the questions. All right, so it's your average share price is equal to 14,650 divided by 3,662,500. Your average share price before your repurchase. Okay, which is 4 rand. Now, what have we paid? 4 rand 25. See, so it's 4 rand 25 minus 4 rands, which means it's 0.25. That's your premium. That's what you paid above your average share price, which goes to your retained income. So you start filling in your retained income note. You have got your net profit after tax. So when you calculate your your net profit after tax, you just take it as it is, even if it's incorrect from your statement of comprehensive income. Let's say we were supposed to calculate and we were not given. You would just take this amount as it is, and plug it in here. Okay. And then you have your repurchased shares. Repurchased shares, we paid 0.25 above of 250 shares. Okay, 0.25 times 250, which is 62,500 in brackets. And you have dividends, we have interim, we have final. All right, so with the final, it's pretty easy. Also the interim, so the final dividends is 36,000 per share declared on the all the shareholders on the register at the financial year end qualify. So the financial year end, we had these amounts of shares, 3412 times 36 cents. So those are your final dividends. 36 cents times 3412, 500. All right, 1,228, 500. Your interim, you must be given on your pre-adjustment trial balance is 672. Okay, that's 672. Add these two amounts, put a bracket here, because this decreases our retained income. I'm getting 1,900,500. Okay, so add all of these. You supposed to subtract what has brackets in it, and then when you do such, you end up with let's see, 1342 and 62. I end up with 2,357,080. And that, ladies and gentlemen, is the end of our question 2 today. In our next video, we will be looking at your cash flow statement and your financial indicators. Thank you for joining me today. Thank you for watching. I hope this was so helpful to you. I just hope this was productive. I wish you well with your exams, your test, and everything that you encounter. Please don't forget to subscribe, to like, and comment on anything that you need help with regarding accounting, as this will also help with creating more content based on what you guys need help on. Otherwise, from me, it's goodbye, and I will see you hopefully in the next video. Cheers.